guys, welcome back to the Good Success Podcast. I am your host, Josh Culler, and today we've got a special guest on the show here, Noel Christopher, out of it's not Colorado Springs, right? That's not where you work remotely. It's what's this?
He's like from Steamboat or something.
Yeah, Steamboat.
Yeah, Steamboat Springs.
That's it. So it's Colorado. Everything about Colorado is amazing. I've been there twice, but he is actually with Renters Warehouse, and we're going to be talking about that a little bit here. And then we have some really super interesting topics to talk about with Noel. That he's one of the most intelligent people I've met, and knows a lot about real estate markets in general, but then also specifically the property management space as well. So, and then of course we got Mr. Tom Olson with us here, back again. That's it's like every other one that you're on here, but Tom's got a business to run, and that's why he has me hosting the.
And I'm a husband,
and he's a
father,
yep.
And sometimes things get in the way.
Yep. Hey.
So the last one, the reason why I wasn't here last time is because I was supposed to be here like right at time.
Yeah.
But my kid had I have two kids that they had physicals.
Yeah.
7 a.m. So we get to the doctor's office 7 a.m. It's awesome. Yeah, we don't get in until like 7:45.
Well.
And I'm calling Josh saying, Josh, not going to make it here. So
sorry. The rule of thumb is if you have a scheduled appointment, normally it's like the actual appointment's like half hour to an hour past that, which is really weird. That doesn't make any sense.
These are kids' physicals. They take 5 minutes.
Oh, yeah. I just went through that. It's a racket.
Yeah, you get a bill for like $200 and it was like 15 minutes, right?
Yeah.
Yeah. So, but we're glad to have Tom back here on the show with us as well. So if you guys are watching Facebook Live, we appreciate you joining us. And if you are watching this post-produced, thanks for joining us as well. We do have a podcast called the Good Success Podcast. If you don't know who we are, you're coming by way of knowing Noel. We have a podcast that is weekly, but is going to be ramping up a lot more. We're possibly going to go bi-weekly and even doing bits and pieces of these podcasts, getting the meat out there so that you guys can listen to maybe a 5-minute stretch or something like that. But we're on iTunes, Google Play, Stitcher, and SoundCloud. So make sure you guys just go to those platforms, search Good Success, and you'll find us there. Subscribe there to us, and then also leave some reviews. We'd like to hear your guys' feedback on if there's any specific topics you'd like us for us to talk about, or a specific guest that you want us to have on the show. That would be awesome. So the mastermind. So Good Success Mastermind, the August event was a few weeks ago. Went absolutely fantastic. We had a really good group. It was at Innsbrook Country Club in Maryville, Indiana, which is a country club that Tom actually has a membership with. And it was really exciting. I just got off the phone with several of our mastermind members, and they all gave me incredible feedback about it. I asked them to be critical, and I kind of had to pull it out of them to be critical. And so I finally got some good feedback, but the guys absolutely loved the event. And the next one is going to be in Miami, Florida on November 8, 9, and 10. And it's going to be an awesome event. It's going to be at the Embassy Suites right outside the airport. And we are going to take some trips to the beach. So just so you guys know, no, the hotel is not on the beach, but we're going to be going to the beach for some activities. It's going to be a lot of fun. Really excited about that. So Tom, do you want to talk about the mastermind at all? Anything to add there with it?
No, every time we go to the mastermind, there's something that you get out of it, and you just scratch your head and think to yourself, well, how in the world is that person doing that? And we had one guy, for instance, he joined our mastermind about 1.5 years ago, and he had just quit his job. And then he showed his numbers for this year, and he attributed most of his growth and success back to the mastermind. And a lot of things that he learned from the mastermind, the mindset, the connections, the helping him with his issues. And I mean, this year he's on pace to do $800,000 net. And I was just like completely blown away by that. And another guy is doing new construction for $55 a foot, and we just kind of made fun.
That blew everybody's mind
because we're like, okay, $55 a foot, man, So anyway, wow. So like it is really.
I need that guy's number.
Exactly. I'm like, why don't you just do a course on $55 a foot? You'll have like.
You just said it so nonchalant.
Yeah, like it was no big deal. Yeah. And we're like, well, I know you're in Lynchburg, Virginia, and I know maybe labor's a little cheaper, but still that blows my mind because most people struggle for $80, $85 a square foot. So anyways, we're super excited about the mastermind. I already have 2 people that have already told me they're going to be there in November that weren't there, that haven't come yet. And we have a list of about 10 or 11 people that have told us at some point that they're going to be there that we're not. I think our membership's up to 28 members now, and that's growing quickly. We will be going to 2 different groups by February. So like I said, we're super excited about that. It's growing awesome. And it really does pertain what good success is to us. And this year, we gave the stewardship award, or this quarter, to Glenn Stromberg, which he if you guys don't know Glenn, he's an awesome guy and really does take his job as a steward or as a property manager or as a holder of investors' funds very seriously. So I really appreciate Glenn, and he did it. I think he was the perfect candidate and the perfect person that won that.
Absolutely. So you guys, in order to find more information about the Good Success Mastermind, go to goodsuccess.com/mastermind. Kevin is on the links right now. So anything that we mentioned that's going to be linked is going to be linked in the comment section, and then also anything that Noel mentioned. So the website for Renters Warehouse and any ways to contact him is all going to be in the comments section. So you guys make sure to check that out. goodsuccess.com/mastermind. You guys got to fill out an application there, and then we will talk to you after that. So without further ado, let's jump into this interview. So Noel Christopher out of Renters Warehouse. Noel, give us a brief synopsis of what you do, who you are, where you're from, and how all of that goes down with Renters Warehouse.
So my official title at Renters Warehouse is Senior Vice President of Corporate Development, and that covers a lot of things that I do. I'm in charge of our property management acquisition. So as we're scaling our business, we acquire property management companies around the country. And so I run our acquisition program. I run our strategic partnerships, whether that's working with other revenue sources for our company or other strategic alliances that will benefit us either in growing our doors or offering services to our customers. So for example, we just recently were set up with RE/MAX to be the preferred property manager with RE/MAX. So it's a big push we're making to really engage in the local markets with the local realtors who are working with these small investors. We really service a lot of small investors as well as larger investors, but our bread and butter is the mom and pop investor. They own less than 5 homes, and helping to enable and educate them to acquire more homes and be more intentional investors than a lot of people who started as accidental landlords at one point, but now they're intentional investors, and there's a huge opportunity to grow that space.
Absolutely. So real quick, we know what it is, but explain what an accidental landlord is.
Sure. So think about 2007, 2008, 2010. The whole market's fallen. All of a sudden, people have lost all the equity in their home, and they've lost their job, and now they have this house, and they don't know what to do with it. A lot of people walked away from homes. They let them go into foreclosure. But then there's some people that decided to rent their house out, and they realized that maybe they came across, that's how we grew a lot of our base, were these owners who couldn't sell, couldn't move, didn't want to foreclose, and they were enlightened to the fact that they could rent their house, not lose all of that equity, not lose all of that money in even a transaction. And now that's all caught back up. And some of those owners have decided to sell and cash out. But many of them have decided that this is actually a viable asset class that they can work with and invest into more homes. And so they've gone from being an accidental landlord that fell into it, now being intentional landlords. And the whole landscape has really changed in the last 10 years with a lot of people like that.
Absolutely.
So I think there's a lot of benefits to a company like Renters Warehouse if you're an investor from out, especially if you're outside the area. I really do like the local property manager, but if you have properties in several different locations, it is a little difficult sometimes to get 3 different types of reports and to deal with 3 different types of property managers that all do things a little different way. So I really think like consolidating all that into one place and one point of contact is a value to people. And I think it's important to note also, we talk about the easiest way to become wealthy in the United States is probably always is and always probably will be in real estate. And, a lot of guys out there talk about cash flow, and that's awesome. That's great. But what they forget about is the real return on investment when you buy rental property. So you buy a rental property, and let's just say your cash flow is $250 or $300 a month. Well, that's great. But like what they're missing completely is if they have a mortgage, they're also paying down that equity every single month on their mortgage. So even if they don't make any cash flow, let's just say there's a $200 repair that month, they still made $300 that month. that month. So we talked too much, I think, in turnkeys and in talking about rentals about that cash on cash return, or talking about ROI, but we completely forget what the real ROI is in those deals. And what you guys allow them to do is, like you said, instead of losing money on a property, you can think about this in a 30-year type of picture. And over 30 years, you're going to make a ton more money by just staying in the deal and letting the renters that rent those properties pay down the mortgages for you. Just that alone would create so much wealth. It's not even funny. And then it's not even just that, but it's the deal that happens after the deal that really normally makes people wealthy and really creates real wealth in this country. So that's what I think you guys are really helping. You guys are really helping people create wealth, and then also having systems in place to be the back end for people that don't want to do it themselves.
So along those same lines, go ahead and explain, and I'm sure you're about to go into it. Go ahead and explain what Renters Warehouse is, and what services you guys provide, and what pain points you guys can eliminate for accidental landlords, or for anybody.
Absolutely. Yeah, absolutely. And you know, to echo Tom's comment too, it's, you start looking at the numbers, and if you just take, well, so many people are focused on what's happening in the market now. Prices have gone up now. They've gone up 8-10%. But if you look back from the time when we started really keeping those records, it's a steady 2 to 3% per year. It ticks a little bit above the inflation, usually the values, and you have a little bit of a rent increase over the years. And it really gets interesting starting at year 5. The numbers get really interesting. And sometimes people are too focused on that short-term gain, and what that, you know, the cash flow is important. You need to be able to pay for your investment, but you're investing so much more than just what you're getting out of that little bit of cash flow. So I absolutely agree with that. And that's something we're focusing on, educating our owners, and then helping enable them to realize that education and buy and invest in more properties. But so with the Renters Warehouse, we are right now, we manage about 22,000 homes across 40 markets in 25 states. The way that we got to that point was by no accident, and it's been over a long period of time. Our company's about 11 years old. We started out as a franchise and a franchisor, and we grew that to about a little over 30 or so franchises. And in 2015, we're invested into a private equity group, which enabled us to roll up a lot of those franchises, create a centralized model so you have a consistent level of service across multiple geographies. And that's where there starts to be a differentiator from us and other franchises. A lot of people think that we're still a franchise, but we operate our individual offices. We have boots on the grounds in our individual markets, but all of our back office and the user experience and the tenant experience, the owner experience, all of that is controlled on a corporate level. So which, you know, the big differentiator is when you look at, you know, we have investors come to us and say, you know, I can't buy in California. It just doesn't work for me, but I'm afraid to buy outside of my geographic region. And I don't want to buy everything in one market, or they think that they need to have scale in a single market. And the landscape's completely changing now with all the services that are happening that we can talk about when we're talking about the asset class being institutionalized. So you can now go, you know, we've had investors come to us and say, I want to buy 50 homes. I need to figure out a market. Well, it's tough to buy 50 homes in one market right now, but you can sure buy 5 homes in 10 markets and get a great return and have the same level of service. And, you know, not only us, there's other companies like us that are trying to do some of the same things, where we're creating this level of service that's consistent. We're raising the level of service in property management, raising the level of service in the turnkey business. And you guys are very well of that, very well aware of that, how that level of service can be different. And you're starting to see a lot of these bigger funds. I mean, there's, for example, a group like Roofstock, they have a fund that buys and rehabs and sells homes to individual investors because of the turnkey business, how it's been, and sometimes can be a little volatile. Everything's changing. That rising tide lifts all boats. I truly believe that, and what we're doing, what other companies are doing. So, you know, our model is, you know, we manage these 22,000 homes. We do that for 14,000 investors. We've created a division that it actually works with where a lot of the innovation happens, working with the larger funds. because they drive a lot of innovation in this space, and that trickles down to the mom and pop investors, which is really interesting. And so we have several different models. We're organically growing. We work with realtors because we don't buy or sell real estate. We don't get involved in the transaction. So we can confidently go to a realtor and say, hey, refer us this business. We'll always refer it back to you. We acquire property management companies and markets. And then we also start working with larger investors. So we might have a large investor that wants to go into a market. We'll go do an acquisition, kind of grow and scale into markets. And we're really proud of what we're doing, and started to really get in on the technology side of things too. We spent a lot of 2018 focusing on technology and building out our technology so we can continue to scale our business.
Awesome. So then kind of you can put yourself up on a pedestal here, or Renters Warehouse up on a pedestal. What really sets you guys apart from a localized property management company? So, let's say that you're in Chicago and you have properties in Chicago, and of 3, 4, 5 property management companies. What would set you guys specifically apart from those localized property management companies?
Yeah, so that's a good question, because a lot of guys are, how many markets we're in, and all of those things are sometimes irrelevant to the guy who owns one house in Chicago, right? So what sets us apart is that we're creating, we're always innovating a process because of our scale and because of what we're trying to do. You're going to get that consistent level of service. And it's not just, sometimes with the local guys, the issues that we run into sometimes, and there's some great local guys, there's some guys that beat us, frankly, because they're very good. They give that white glove service, but what systems and processes do they have to do when they scale? So the difference between having 100 doors under management and 101 doors under management could actually break your system, because if you don't have those processes and you don't have the systems in place, so that's sometimes a risk. And also, how is everything siloed? A lot of times in the smaller companies, everything's siloed with one employee or the owner. And if there's anything that happens, the level of service drops very quickly. And so we try to solve that by having a customer that interfaces with all departments, so that it's a machine. You can fit people into that machine and work that. We're not a white glove service where you're going to have the owner of the company that has everybody has a cell phone number, and the tenants and the owners and everybody are calling this one guy getting this certain white glove service. We're never going to get to that point, and that's not what we're trying to achieve. But what we are trying to achieve is making the process more efficient, and so that there are no breakdowns in the system. Because in this business, it's all about efficiencies. It's about your controllable costs and how you make those controllable costs more efficient. How quickly you reply to maintenance requests, how quickly you turn a property, how quickly you get that property rented out. All of those things affect the ROI. And it really is that tenant experience, I think, is one of the most important aspects of everything, because if you have a tenant that has an issue, and it could happen, a water heater breaks a week before a lease renewal comes up, and you take an extra week to get that fixed, and that lease renewal comes up, that tenant may decide to move out. And in this business, it's what have you done for me lately? And owners are happy now, but something happens tomorrow and they're not happy anymore. Tenants are happy now, something happens tomorrow, they're not happy anymore. So that experience and that friction, you try to make it less friction, really affects your ROI. And so try to really drill down into that, and just little things that you can do will increase that overall for the owner.
Well, I guess not only that, but just as it is in any industry, there's always a percentage of that industry that just completely sucks, right? I mean, I'm sure you've come behind some of these property managers that yes, you have these white glove people like Olson Property Services, like our company.
Shameless plug.
Shameless plug. But I'm telling you, like I've seen average turnovers of like 2 and 3 months from some people. And I'm just like, that doesn't even make sense to me, because I know when I put a house in the market, our average days on market from the time we put a house in the market to the time it rents, and not just rents, I mean like actually sign the contract, is 7 days. So it's
that's great.
It's like but for you, like you're keeping track of all that data, and all that data makes sense to you, and all that data is being being calculated and reviewed all the time. So you know, like what kind of service that you're giving. And that's what most property managers aren't even doing. They're not keeping track of that data. They don't have those type of points that they can kind of go back to. And you've systemized this thing. When I started looking at the different corporate models of different, even in what we're doing, even in fix and flipping and even in building and all that stuff, there's things that the small mom and pop guy has to learn from the big carriers, because in order, like you said, in order to scale, in order to keep things running, there's a difference in 100 properties and 1,000 properties. Like it has to be managed completely different. You have to have a higher level of accountability on everything that happens. So I hope that made sense, but really, like, I think at the end of the day, the other piece that I would like to point out is, so what is your average cost then? So are you able to say that? Like, what do you normally charge? Is there like flat fees that you guys are charging for doors to manage?
Yeah, I could absolutely talk about that, as long as we're not talking about our fees together, right? For antitrust stuff. But
sure.
Yeah, so we depending on the market, we charge anywhere between $79 and $99 a month flat fee. We also have a tenant placement of 1 month's rent is typical, although we're exploring different models with that. And we're also exploring having different models, different tiers on our pricing. Right now, our pricing is based off of the market and the cost of the market. But as the industry changes and you start to get into that tiered pricing where you can offer some premium service and some bare bone service, so we're exploring all of that. And I think that, to your point with the property management industry is pretty antiquated in general, and because of that, you have a lot of owners who are not realizing how much ROI they're losing on a yearly basis. And again, just like your ROI multiplies for the positive, it also multiplies for the negative if you're losing a little bit each year. And because of that, we've gotten a lot of pushback in the industry, to be honest. And we're not a startup, but we're in a startup environment, and we're trying to figure it out like everybody else. We've just figured out a way that we could quickly scale. And we still are having to figure out operations. Every day we're battling on how to onboard people better, less friction between a handoff of the lead, how to manage a property better, how to deal with maintenance and repairs, which is the single most biggest issue that owners have working with any property manager, and how to figure out all of those things. And so we get a lot of pushback from the industry that's afraid that we're coming in and we're trying to take over the industry, but that's not what's happening. There's always going to be a need for all different levels of property managers that have more of the white glove service, that have more of the scalable service. And, there is, because we're very connected in the industry, know what's going on. I mean, there's multifamily companies that are starting to dip their toe in because multifamily funds are starting to dip their toe into single family rental space. There's large institutional funds that are exploring offering third-party property management. So a lot of the guys who are fearful of what's happening in the industry with the consolidation have to realize that they need to get with the program and start making their process better. And the tools are out there for people to be able, for property managers to be able to leverage the best practices of all. And everything that we're all doing is only increasing the opportunities for everybody, because these efficiencies that we're creating, they're no secret. They're just the drive of innovation is making the industry better. And so it's really interesting to see it happen.
And you really have to be willing to change with it. I used to manage properties. This was probably 15 years ago. I actually managed 40 rental properties on the side. I had a full-time job and I was managing 40 units on the side, and I didn't have anything. Like when I used to go out and put signs up for rent, I used to go out and like post it on Craigslist and do whatever I could. And now with the technology today, the marketing out there is just amazing. And there's ways to be able to leverage that. And I think if the smaller mom and pops don't at least adopt a portion of that, they're going to be completely left behind.
Well, absolutely. And you see it happening even in the property management software industry. You had a lot of software companies that have these closed systems, and you're getting a lot of pushback because in that closed system, they do two things well, but the rest of it, they don't do that well. And there's other things out there. Like I'll give a shout out to guys like Property Mill. They do that part really well on the maintenance coordination side. And you need to have a software platform that can plug into other systems that work either are better or work for you as in your model. And so I'm seeing that in the software industry, where this whole one-stop shop closed system, that's not where it's going. It's going to more of the open API, and you can create a platform that works really well and plug it into the other platforms. And it's really interesting, the innovation that's happening, and it's shaking up the software industry. It's shaking up the property management industry. Everything's changing, but for the good. But with that, there's a little bit of hype with some guys.
So let's go back to pricing. So I guess you said you're between $79 and $99 a door, pretty much. So I guess, I mean, when you look at that pricing compared to somebody that's charging 8 or 10%, which is probably the norm, there's probably some areas where you guys are cheaper and some areas where you guys are probably around the same price as a property manager.
And some where we're a little higher as well.
Yeah. If your rents are $800, well, then that might be a little higher if you're there.
Yeah, it is. But then we find $800 rent properties take a lot more to manage. And so, you know, when people say, well, my rent's only $800, you're charging me 11%. It's like, yeah, well, you know, it's sometimes it's a little bit more high maintenance to manage that type of a tenant. Generally, they actually expect a higher level of service than a tenant who's paying $2,000 a month. It's really interesting. It's a little counterintuitive. But yeah, so we're right there in that pricing. And, you know, as I mentioned, we're always trying to mess with that model a little bit. But what we're trying to do is create a higher level of service for a little bit lower price. I mean, that's really, so it's not just about the lowest price. And we find that as we're looking at property management companies to buy, sometimes guys will take a haircut to bring on a larger client or to scale. Typically, even for our large clients that we're managing 2,000-3,000 doors, we're not giving them a discount on our services. It just isn't. I don't believe, or I don't think as a company, we don't believe in that model of that discount model and the freemium and things like that. You need to create value for what you charge and make sure that's a good service and stand behind it. So that's what we try to do as well.
So while we're kind of on the topic already, I know that one of the list of questions that I had for you was consolidation of the property management space. So let's stay on that for a little bit more. I mean, I know we've skimmed over it a couple times in this whole conversation here. Is there anything that you want to add to that whole topic of consolidation in the property management space specifically?
Yeah, you know, it's not about plugging what we're trying to do. People are pretty aware of what we're doing. We see the opportunity to consolidate property management companies, and what I'm seeing as well in the space. And well, I'll give you a little bit of history of what we did. We spent a lot of last year buying or acquiring some smaller property management companies to scale into markets, and usually that'd be combined with an investor interest, maybe a fund that wants to be in a market. We go find a smaller operator, and we went through some ups and downs to that. Lessons. And the reason we started small was that so we could learn our lessons with the small acquisitions. And now we're wanting to move into larger acquisitions. So going forward, you're going to see us making acquisitions that are 700 doors and up. And the reason those are more interesting to us, or a lot of reasons, because we're dealing with a little bit more of a sophisticated seller, less friction. And we'd rather acquire a guy who has 3,000 doors who's acquired some other smaller guys and then make that transaction. And so what we're seeing is that we're seeing a lot of regional property managers are now expanding, and they're acquiring some of these smaller guys, or maybe going to the next city over, the next state over, and creating these super regional property managers. And the same thing happened in the real estate brokerage industry several years ago, where they just all kind of expanded out. And then that makes them more interesting to merge with other regional and create a larger company, which I think will probably happen in the next few years. We're going to see some guys pop up that all of a sudden are managing 10, 12, 15,000 doors that were a couple of groups combined together. And then you're going to see companies like ourselves do some larger transactions of these regional buyers. It's much easier for the local guy to buy local and then get acquired by a bigger guy than us to go into a new market, buy a small local operator and try to figure it out.
Mm-hmm. Absolutely. So let's switch tracks a little bit and go back to you. So one of the first things that I actually found out about Noel when the first time I met him, I believe I met you in November, right? Was that when you came to our?
It's a good success, which was great. I loved it, by the way.
Yeah, awesome. So that's the first time I met Noel. And one of the first things I found out about him is that he works remotely in Colorado. But right now you're actually at the corporate office because you got some things you got to get done there. But can you explain that a little bit, kind of how the process is for you working remotely and just kind of living your dream in your haven there? You love to ski, friends with you on Facebook, and I see posts about you skiing with your kids all the time. So that's awesome. So maybe talk about how it works for you with remotely working, especially you're managing that many doors. That's absolutely insane. So maybe go into detail about that. Now you're not managing it, but you're
right.
running the operations of the business.
Yeah. Well, to kind of give you a little background, I lived in Chicago for almost 20 years, and that's where I really cut my teeth in the real estate industry and made a lot of contacts, and I still have a lot of connections in Chicago, and I still spend some time back there quite a bit. But at one point in my life, I just decided that I was living my life to live in a place and do things for other people that wasn't fulfilling for myself. And so I made the decision to move to Colorado, where I grew up. I originally grew up in Colorado, and I actually moved to Colorado with no job, just decided to move to Colorado with a family. And that's where my career actually changed completely and kind of took off, because now I was living a more fulfilled life and doing what I felt was right for my family and myself personally. And that, not magically, but you know this, we talk about this all the time. It allowed me to be open to better opportunities and be a better person. So working remotely is hard. It can be hard because to get the collaboration with the team, and I'm less on the operations side. I'm more in business development, so I can kind of be out there and be that lone wolf doing things. But a lot of the things that I do and a lot of the initiatives I work on require a lot of collaboration. So I'll come back to the corporate office once a quarter and then travel to conferences and whether we're trying to do a transaction or whatever. I'm traveling quite a bit, but I prefer to travel from a place that I really love, that my family loves. And then I come back home and my wife is, hey, what'd you do? And she did a million things with her kids because she's in an environment that makes her comfortable and my family comfortable. So that's great. It can get a little lonely sometimes because I work a lot. And so I'm at home working, and then all my interactions with people are virtually. So I kind of sometimes miss that human connection. And so that can be hard. And then a lot of times, because when I'm home, I'm either working or spending time with my family. I'm not really socializing that much. And then I go to these conferences, and all my socializing are people that I work with. So we talk about work. So creating friendships and having that human connection that is beyond work and having intellectual conversations, I've had to realize, and that's one of the things I've had to adjust, is try to seek that out and have those conversations. And so it's really interesting, the dynamic, but I like it. And it's not for everybody, but where I live, 35% of the people live their work remotely.
That's awesome.
And so that creates an interesting dynamic. And the world is changing, just like everything. It's changing where you can do this and we can have these conversations and you can collaborate. And so we're exploring that more with our company, and it's great to people, if they have fulfilled lives and fulfilled home life, they're going to be better employees. And it's not about the butts and seats, 40 hours a week. I work, at least 40 hours a week, and I work a lot more, but I'm just more productive because I'm home for my kids when they come home from school, and I'm there for them when I'm there, and I'm a present person. And it's always the cliche everybody says, you're never going to die wishing that you worked more. And so you can do both. You can have that if you choose.
Absolutely.
I think it's interesting that you bring that up because, with this last mastermind that we had a couple different fun times that we really just got to get together. We went golfing kind of like the day before if people wanted to come in early. And then we went to Chicago, which was kind of funny because we had people running to the train literally like seconds before the train was supposed to leave. So we had a really good time with that. But I think it's just like an entrepreneur, for instance. An entrepreneur sometimes all they do is work, and then they come home and then they're home, but they don't really get to have fun with other people unless they can make time for it, or unless they can go to a mastermind, or unless they have other places or times in their life where they set that apart to kind of work on their business, but also to have those friendships and to have those ways of communicating and connecting with people that are of like mind, not just in business, but also in life in general.
Mm-hmm. Absolutely.
Yeah, I couldn't agree more. It's so important those are what make you. And the more you have that fulfilled life, the better you're going to be in your life, in business. I mean, it's a fact. It's not always about the grind.
Yeah. So I always say, like, you need to have the person in your life that's encouraging you, and then you need to have the person in life that you're encouraging. So you've got to find a way to plug into both of those people every single day.
Yep.
Absolutely.
I agree for sure.
Awesome. So switching tracks one more time. So we got one more solid question for you.
What are you doing, Josh? We're going on one track to the other track.
Hey, we're just trying to keep it interesting. We're trying to keep it interesting, trying to make sure everybody's focused that's listening to this.
I can't even pay attention to you today, Josh. So you must be getting married in a couple months.
Yeah. Oh, congratulations.
Thank you. It's coming up super quick, but anyway.
Now the work begins. Marriage is hard work, but it's very fulfilling.
He's going to Iceland for his honeymoon, and he didn't realize there's no ice in Iceland.
There's no, that's news to me.
Go to Greenland.
It's more like green, and then Greenland's more like ice, right? So.
I still have so much to learn about the world. But anyways, so one of the things that you mentioned that you really wanted to talk about on the podcast here was institutionalization.
Tough one. It's a mouthful.
Man, that's a long word. That was rough. I butchered it. Of single family asset class. So if you want to explain that a little bit, I'm not too familiar with that. I'm sure you are, but maybe explain that a little bit and give some details about that.
It's some of the things we've been calling, where we've been talking about. It's really about the single family rental asset class. So the single family rental asset class has been around forever. If you want to include 1 to 5 units, you have 22 million long-term rentals, 1 to 5 units, about 17 million rentals. And that grew by about 7 million since the downturn, where a lot of people went from owning to renting, and we're kind of shifting some things where people are choosing to rent long-term forever and then maybe invest. I mean, we see that with some of our people, that we have a percentage of our tenants who actually own investment properties. It's amazing because they're making that choice with job growth marginal, with wage growth marginal, wanting to be able to move where you want to go and things like that. Sometimes it always doesn't make sense to own a home to live in until you get to a certain point. What's happening is that institutional funds came in and were buying single family homes back in 2012, around that time. And they really kind of set the floor in the market, and they started investing into this class, and it brought a lot of notoriety and a lot of publicity to the single family rental class. So look at the breakdown of single family rentals, 50% of all the single family rentals are owned by somebody who owns one house, one investment property. 80% are owned by those who own 5 or less. So it's a very mom and pop space. And now there's some theories on that. I think some of it has to do with the financing that was available. Up until recently, you couldn't finance more than 5. Once you get up to 5, it got really restrictive because of the rules of having how much you had to have in escrow, or how much savings you had to have to cover those. So that's changing. And with that, these institutional funds invested into this asset class big. They created a model that was viable, and they're starting to institutionalize it on that side. So where there's lending available, you start looking at it, and I'm sure you guys are aware of this, some community banks where you can now get single family rental loans. You've got all of the, a lot of time, for a while, the void is being filled by hard money lenders. You have prime borrowers going to hard money lenders to borrow money. So that's starting to separate that back out to where the hard money really is the non-prime, and you have traditional lending that you can get for single family rentals. Freddie Mac has jumped into it. It's really, really interesting. So that side of it's being institutionalized, and along with that, the service industry is being institutionalized. And what we're doing, the opportunities to now buy, I mean, you can now today go on a platform, look for a single family rental home, buy it completely remotely, understand, and with full knowledge and confidence that you know what you're getting. And that's why it's shaking up the turnkey business as well, because it's no longer it's still local, and it's always going to be local. And I personally believe before you buy a house, especially your first one you're going to buy, you need to go to that market, understand it, and see the house and experience that experience. But with the service industry, with everything happening, it's being more, being institutionalized is not a bad thing. It's just increasing the level of service, it's increasing more opportunities. It's happened in all the other asset classes, industrial, multifamily, shopping centers, all of those things. It just means more opportunities. And the difference with the single family rental space is it's mostly owned by small investors, where a lot of the other asset classes were owned by more businesses or entities. And so it was easier to institutionalize. So this has been a little bit different process, but it's great because people don't realize the single family rental class, it's a $3.1 trillion asset class. Multifamily is $3.4 trillion. You've got the only other asset class, I think, besides multifamily that's really bigger is actually self-storage, which a lot of people don't include when they're looking at numbers and they say all these asset classes and real estate asset classes. Self-storage is huge. And that's something I think we learned in the Think Realty Leadership Council. That was really eye-opening to see all that. And so it's an asset class that people don't realize it's there, and it's been very antiquated, and the level of service has been very low. A lot of things are happening, and it's not because of the property management lobby, which some people don't realize is that there's a lot more regulation happening to own a rental. And that's causing people to need more professional management. It's just a byproduct of some of these more urban areas that are harder to do business, or a little bit more friction to do business. They create a lot more regulation around rentals. And sometimes it's some fear of the rentals ruining a neighborhood, which is not true at all. So there's a lot of different things happening. It's requiring more service and more professional service in the industry.
I agree with everything you said. So I don't want to say that I don't agree with that, but I think the other
Please
side.
don't if you.
No, I know. I mean, but there's another side of that too. So, for years and years and years, all the financial advisors, everybody on Wall Street, everybody that was like a professional investor always kind of like used stocks and bonds and all these kind of things in these graphs. And they always put real estate way out here in this like, if you're a psycho and if you're whatever, you'll do real estate. And what they've realized, and they always made it more risky. But something very, very important happened in real estate. A man named Warren Buffett, which we all know, right, got on a soapbox one day and said, if the best investment I could make, if I could do this, I would go out and buy as many single family residences as I possibly could. And all of a sudden, all these big, smart guys, I mean, this is a guy who reads 500 pages a day or something crazy. I don't even know how he does that and gets anything done. But right. One of the smartest investors, and if you don't think that, I think that you need to like check what Warren Buffett's done. But he comes out and says this, and now everybody starts thinking to themselves, okay, maybe he's got something to that. And I'm not saying that Warren Buffett's made the complete change all by himself, but I think a lot of people now have realized that when you invest $100,000 into a rental property, it's not like buying a stock that literally can go to zero. There's a lot of safety. And that within the last crash that happened, I think a lot of people started thinking, maybe there's more safety in real estate than there really is in the stock market. Yes, we've seen the stock market always do this, but that stock that you buy can go to zero. Somebody always needs a place to live. So when you invest $100,000, and again, let's go back to talking about cash on cash returns. Like let's just say you put $100,000 of your own money in cash and buy a rental property. Day one, you're not making, let's just say your net operating income is $10,000. Most people say that's what? A 10% cap rate, right? Very simple terms. But it's not. Like
right.
You're literally infinity investment. You're making infinity day one when you buy a rental property, because all income is coming back to you and you still own the original property. You still own that original asset that's going to continue to be now the actual asset itself is what goes up and down in value. We completely forget, if that $100,000 house, let's just say we have a market crash and it goes to 80, that property doesn't know it goes to 80. Your rent still keeps coming in. If your rent's $1,200 a month, your rent's still coming in. It doesn't matter how much the property is actually worth. Mm-hmm. So I think people have kind of made it so, like, in my opinion, real estate now has turned the risk curve upside down, where in my opinion, real estate's actually less risky over the long haul, but only, and I'll preface this, only if you have good property management in place. So if you have good property management in place, I believe real estate is the absolute best investment that you can do out there. And if I didn't believe that, I wouldn't be doing what I do.
I agree. And you know, we talk about how you can buy these homes outside of your region and all these things. And property management's important, and also who you're doing business with. I think sometimes people get blinded by the great, you know, these great numbers, and they're not doing enough research. And so you need to pick qualified, good providers. And like I said, that industry is changing too, because what I saw happening is you've got too much of a flow. You've got these educational funds or educational groups that are charging people to get in to put them with these local operators. And we've talked about this before, Tom. There's too many people taking too much equity out of the home, and you don't need that. And the friction to get directly to that property is changing, and that's going to benefit the end buyer, because they're going to buy it for less and have a greater return. Not necessarily the cash return every month, but the greater return of equity, and they're not giving away so much. And nothing against the educational groups and the guys who what I consider kind of are lead genning, like bringing in these investors. But now those investors don't necessarily have to do that. They can go directly to these buyers or to these sellers. And everything you said, I agree. It's you know, if you look on this whole screen, this is everything you can invest in. This is everything you can invest in the world. The stock market is a tiny little blip on that screen. And the real estate is not even included in that. There's so many other things you can invest in real estate. You can invest in private money lending. You can invest into other businesses. The stock market is a very small amount of that. And when you're on the stock market and you're a financial advisor, when they're putting things in front of you, these funds are about scale and mass and having billions of dollars to be able to work with. And that sometimes isn't the best return for that individual small investor. And so it's real important to realize that the world is not just the stock market. The stock market is so small compared to all of the financial wealth that's happening in the world. And real estate is a huge part of that. And in people's businesses and the small businesses, everything that's happening, you know. And so you go off on a whole tangent on that, but it's, you know, too much is put on, in my opinion, on what the stock market's doing. The stock market, what happens in the stock market today isn't an indicator of what I'm doing in my business today, or what's happening in the health of my business today. Quarterly earning and what my business earned this quarter doesn't really mean anything to me as a small business owner or as an investor of real estate. You're looking at the long-term investment, what it means to you personally. So
yeah, it's very manipulated, in my opinion. I think when you're buying a stock, somebody else has already made all the money. But that's just a whole different. I was kind of going back to why is it being institutionalized? And in my opinion, the funds and the people with a lot of money or access to a lot of people with a lot of cash have realized this risk curve is actually, that's kind of where I was
absolutely
getting, is that the risk curve on real estate, if managed properly, is so much less risky than a lot of other things that you can choose out there.
Oh, absolutely. And the fact that these larger funds have seen that, it's great, because that's caused efficiencies in the space, because they have to become efficient. And look, in 2012, when these funds started, there wasn't even property management could be done. If this all started today, a lot of these funds wouldn't even necessarily internalize. They don't want to do property management. They'd rather have somebody do it. And that's brought up, you know, we're not the only one doing what we're doing. That's brought this whole industry up, and it's going to help the small investor, because while bigger investors are getting involved, there's such a demand for rentals that it can't be kept up with the housing supply right now. I mean, there's just isn't enough product for even the renters, for homeowners, all that. So the small investor is always going to be there. All of these opportunities are going to come to them from what we're doing with larger investors to manage a guy who has 1,000 or 2,000 doors. Those best practices, as soon as we figure them out with that larger investor, we figure out how we can give that to the smaller investor. I mean, it just is what it is, and it's great.
Right, absolutely. We could go on and on talk about this all day long. So I've had a really good conversation here with Noel. Thank you for being on. We just have a couple more questions for you. So for us in our business, like we talk about good success, and good success for us is not necessarily just the scale and just doing all these deals and just making a bunch of money. I believe good success is about doing the right thing, about adding value. I think there's only two ways to make money. You can either add value to people's life or you can rip them off. That's it. That's the only way you can make money. And so for us, like, good success is doing the right thing. Charity is like, how can I work to have to give? How can I be the conduit, not a bucket? That's what good success is to us. Being a good steward. All those things kind of go along with what we think good success is. But we always like to ask our people, what does good success mean to you? Or maybe give us an example of like how you and your company does what you think good success is.
Well, I think, some of what you talked about, really being able to help people. And for us, we've been able to acquire a bunch of customers that own properties. And we really want to focus on helping them create financial wealth. And it's something that I know is important to you too, and I always say this, to enable and to educate them to buy another property, not just so that we can manage it, because there's no guarantee they could cancel at any time. They could go with somebody else, but we want to help people realize through investing into real estate, creating that wealth and creating a better life for themselves, and not always, there's a lot of things to talk about how, debt right now is at an all-time high for Americans. Well, that only enriches somebody else. That doesn't help them. And so helping people understand that it's not about having the next iPhone. It's more about saving that money and investing into real estate. That's going to make you happy in the future. And that's going to make you a more fulfilled life. And so that's something as a company that's really important. And for me personally, I believe in, I do a lot of things in Chicago with the Chicago Hope Academy in Chicago, and helping in the inner city and seeing, what's going, I may not live in Chicago, but I believe that you can help one person at a time. And so on a local level, helping people and being involved in your community, in your church, and all of these things to be fulfilled, and promoting that, and doing what I'm doing on things like this to be able to get our message out and get my message out and what we believe in, and showing people that, there's more to life than just the daily grind of your job every single day. I mean, you can be more fulfilled in that. And so that's important for us, I know, as a company, and for me personally. And that's why I like what I'm doing.
That's great stuff. We appreciate that, Noel.
Awesome.
That was, absolutely a fantastic answer. We always love hearing different people's point of views with this when we ask this question, because it's never really the same when people answer this, but it all matches up. It's all great stuff. So we got to wrap this up with one more question. You guys had a nice tennis match going there. I really enjoyed that. That was some really good communication going there. But so you got to leave our audience with one thing, whether that's a piece of advice, a quote, a statement, a thought that you have, whatever it is, one thing that you got to leave our audience with. What would that be?
So I think the one thing, and this maybe it has nothing to do with real estate. The one thing I tell my kids every single day is that if you are being yourself and being true to yourself of who you are, everything's going to work out no matter what. Just be yourself. Don't try to worry about other people and what other people are doing. And I guess it does relate to business too. Focus on your business and what you're doing, what you believe in, and understand who you are and who you want to be, and you're going to be successful, instead of worrying about all the other noise out there in the world and what you should be and how you should be and how you should act. Be yourself. And if that's quirky and weird and or interesting or whatever, it's great. Just be who you are. That's the most important thing to me.
Love it. Love it. Love it. Love it. So that's going to do it for today's episode, guys. Noel, thank you so much for being on and sharing all this awesome information with us. If there is somebody out there that is interested in learning more about you or Renters Warehouse, what would be the best way for them to make that happen?
Sure. They can email me at Renters Warehouse, Noel C, Noelc at renterswarehouse.com. They can obviously go to Renters Warehouse and look us up and see about our services. I'm very active on LinkedIn. You can reach out to me on LinkedIn. I spend a lot of strategies on investing and maybe getting into real estate. And that's free advice. I expect nothing from it. And it could be in areas that we don't even manage homes. I love to share my knowledge and what I've learned in the space and things like that. So I'm very much open to. And in fact, you can go on my LinkedIn, and there's a link to my calendar where you can actually book an appointment on my calendar, which is very interesting because I get some interesting people booking on my calendar and I have some great conversations. So
awesome. Good to hear. So Kevin's
renterswarehouse.com.
Yeah, renterswarehouse.com. So
Yep.
Kevin's actually going to find that, and then he's going to link it below, and as well as Noel's email address for you guys to email him if you have any questions or comments or concerns or anything like that. So Noel, thanks so much for being on the podcast today. We appreciate you taking time to be on with us and sharing all the information, allowing us to pick your brain a little bit and make that happen. We look forward to having you back soon, and then seeing you are you going to be in Atlanta for Think Realty?
I will be.
Okay.
I will be.
Well,
awesome.
we will see you there then. Awesome.
All right. Thanks a lot.
All right. So that's going to do it for today's episode, guys. Thank you so much for listening in. And then make sure you check out all the links that we linked below, as well as goodsuccess.com/mastermind. Our next mastermind event is November 8, 9, and 10, and that is in Miami, Florida. You guys want to learn more about that, goodsuccess.com/mastermind. We do have you fill out an application, so you guys can do that there. And if you are not already, make sure you have subscribed to the Good Success podcast on iTunes, Google Play, Stitcher, or SoundCloud. If you go to any one of those platforms, just search Good Success. You will find us there. Some awesome interviews that we've had, just like the one that we've had here with Noel. We're doing weekly for sure, but we're going to be pushing those to 2-week very shortly. So you guys make sure that you subscribe so that you don't miss any of our episodes. So that's going to do it for today's episode, guys. And in the words of Tom Olson, be a conduit, not a bucket.
Work to have to give.
Work to have to give. We have tons of statements we could say. Love it. Thank you guys for watching, and we'll catch you on the next one.